Hello and welcome to FinextraTV. I'm Alex Lippic, and kindly joining me in the studio today is Joe Myers, Executive Vice President Global Banking at Diebold Nixdorf, and we're going to be discussing the future of branch banking. Joe, it's a pleasure to have you here. Thank you for joining us.
Great to be here, and thanks for having me.
Really great to see you. Arguably, we are experiencing a time of rapid digital transformation within banking. I'd love to know what you think or how this will impact branch banking specifically. And will physical banks still exist in 10 years from now, do you think?
Great question. And I'm not here to predict the future in a 10-year range, but I can tell you what's happening right now. A lot of investment is happening in the branch space. If you look across the world, one of the key ways that banks are still attracting customers is through that branch presence. In fact, when people are choosing a bank for their financial matters, of course, having a branch presence or a physical presence is really, really important in that selection process. The key thing, why do people go to branches? Well, there's a few key blocks. One, access to cash. Cash remains the backbone of the economy. You and I know that we are using card payments, digital payments all the time. But actually, cash in circulation continues to grow across the world at a compound annual growth rate of about 7%. So cash in circulation continues to grow, and it remains the backbone of our economy. Think about major disasters. Think about things that could happen where countries have gone cashless. In fact, they've reverted that trend and insisted that cash become a part of the economy and regulated that it in fact is. So more and more we're seeing countries step in and create legislation that ensures cash persists and ensures the protection of cash in case of disaster and the resiliency of cash in the economy. Many examples, and you go to the most modern economies, and I'd reference Sweden, I'd reference the Netherlands, I'd reference others that have in fact turned back and legislated that retail outlets must in fact accept cash.
It's really interesting what you say about the importance of cash. And I wanted to ask you, cash and human relationships, they've both played a key role within banking for many years.
Sure.
How do you actually see both evolving, kind of looking forwards as best we can, given what you've just explained?
Well, let's start with the cash side. So first up, the need for cash, just on the resilience side, right, gives us one path. But also, people are using it as a budgetary tool to know how much money they have and continue to use that. And then we've got a significant part of our population globally that is not digitally active. So discounting cash discounts their ability to participate in the economy. And as an inclusive species, as we are, I guess, it's really important that inclusivity continues. From a human interaction perspective, I'll reference myself, right? If I have a complex transaction I want to do, it might be a mortgage, it might be a different product that I'm not necessarily entirely comfortable of completing digitally, or I want to start digitally and end it physically. I need to have those options available to me. And trust comes from working with people that can help us achieve those goals. It might be a first house, it might be something else that's very, very important to me. And as I think about the investments I'm making and the choices I'm making. And getting that reassurance from a human on the other side makes a really big difference. And of course, banks are generating income from those transactions. And so where there is that trusted relationship, those are the banks that are really thriving because people trust them to do those transactions and enable them to continue earning income from them.
Trust being a key word. Like you say, it's making sure that banking's accessible for all different generations. How about self-channels? What kind of role do they play in terms of improving customer experience. We talk about customer experience all the time, maximizing that. How do self-channels play a key role in that?
So the self-service channel specifically enables, I'll go back to that point I made about the interaction. There's no doubt that retail banks spend a significant amount of their annual spend on their branch network. And so they are continuing to look for manners in which they can be more efficient. Efficiency is a big part of it, as it is in all business, looking to reduce our costs and expand our revenues. And our self-service channels allow them to put capabilities in place which replace human, right? And so you think about simple transactions, getting a statement, getting a card, a debit card, or cash in or cash out. Those transactions people are getting pretty used to doing via an ATM or ITM, and that'll continue. And more those capabilities are expanding. But ultimately, it's humans that are teaching people that are not that comfortable with the technology to use the technology and reducing the number of interactions they have with those folks. And the branch staff is becoming much more adept to selling additional products and creating value for the bank. So you get, one, the efficiency of less transactions occurring, and two, the advantage of driving additional revenues, which of course contribute to the bank's bottom line.
How do banks, in your opinion, strike that balance between physical and digital services?
Yeah, it's a question that's being asked by so many of our customers right now. It's enabling the technology. I like to think about it as a roadway. I want to get on and I want to get off, right? And so if I think about, again, transactions that you may start on your mobile phone, you may want to end or need to end somewhere else. So very simply, staging a cash transaction. I know that I want a significant amount of money in cash, and I need to get that from an ATM. I'm able to stage it on my phone. I'm able to go to the ATM. I'm able to tap my phone on that ATM and end the transaction at the ATM. So this ability to start wherever I want to, wherever I'm comfortable, could be in the comfort of my own home, on my mobile phone, and then ending either in branch, at an ATM or other, is the way it's happening. That consistency of that experience is what banks are investing significantly in, so that my experience on my phone, my experience at the ATM, and the experience at the branch all look similar. And the transaction flow continues to be seamless and enable me to feel comfortable of where it's starting, where it's ending, wherever I choose to go.
That transaction being seamless, making sure the customer has the best experience possible, regardless of what it is that they're trying to achieve. Really enjoyed speaking with you. Fascinating topic. It'll be interesting to see how things develop over the next 10 years or so. But I look forward to welcoming you back in the studio again. But in the meantime, thank you so much, Joe.
Thank you.